Good Tuesday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance executive editor Brian Sozzi. Trading is underway, as you can see, with the opening bells happening right there at the New York Stock Exchange and NASDAQ. Now, let me quickly set the tone for today's show before getting to Ali Canal. Down at the NASDAQ, we have news of an eye-popping amount of layoffs at Amazon, struggling digital bookseller Chegg, and UPS. And this just crossing moments ago, Microsoft and OpenAI have tweaked their long-time partnership. We'll talk a little more about that later. The Fed meeting begins today with a second straight rate cut likely coming tomorrow. Economic bellwether UPS laid another quarterly sales egg, yet investors are cheering an earnings beat in those aforementioned layoffs. AI godfather and NVIDIA CEO Jensen Huang is slated to give a keynote in DC and potentially unveil some new tech. Bottom line, as you can just pick up from my hurried voice, keep your head on a swivel today because there's a lot happening in these markets. Now let's get over to Ali Canal at the NASDAQ and check in on the markets.
Hey, Brian. Yeah, plenty to digest this morning, and it looks like markets are perking up across the board, eyeing another round of fresh record highs. I'm seeing the Dow up around 300 points, the NASDAQ climbing roughly 0.5% higher, and the S&P 500 also up around 0.3%. Now, this comes as investors continue to digest a slew of earnings out early this morning, look ahead to big tech results later this week, along with the Fed rate cut decision coming on Wednesday, and then, of course, ongoing trade negotiations in the background on the political front. But I want to check in on shares of Amazon. This has been one stock that's been on our eye throughout the past 24 hours. We are seeing shares up just modestly today, 0.5% after the company said it plans to cut about 14,000 jobs as it works to pare expenses. And this comes as we're seeing more and more tech companies lay off workers. Meta is included in that, along with Chegg, which is slashing 45% of its workforce, blaming the new realities of AI. And we'll be chatting this new trend throughout the day's show. And I also want to check in on shares of NVIDIA. We are rising about 1.6% at the open. Later today, all eyes will be on NVIDIA CEO Jensen Huang, who's set to speak at a company event. Investors will be listening closely for any clues on which AI chips NVIDIA can still sell into China. That's become a key flashpoint in the ongoing tech tensions between Washington and Beijing. So, like you were saying in your intro, Brian, just plenty to keep track of this morning and throughout the rest of the week.
Fired up, Ali. We'll talk to you in just a second. Here are the 7 things I'm tracking this morning. Amazon said it will lay off 14,000 workers as part of its big AI push. Here come the robot workers. Struggling Chegg is canning 45% of its workforce. Its longtime CEO Dan Rosenzweig will return to captain this ship. And buried in UPS's earnings release is this one. The company said it has laid off 48,000 jobs in management and operations this year alone. That's a huge number. OpenAI has completed its recapitalization. Fun fact here, Microsoft's stake in OpenAI is now worth $135 billion, or 27%. PayPal shares are ripping in the early going as it will become ChatGPT's first digital wallet. Not bad. New CEO Alex Chriss using his tech connections to make this one happen. UPS beat earnings estimates by a whopping 42 cents, though I will note sales tanked 2.6% in its key U.S. domestic segment. Tesla chair Robin Denholm warns Elon Musk could quit as CEO if his $1 trillion pay package isn't approved via a vote on November 6th. Lots going on today, and frankly, I'm just out of breath right now. Here on the Open Bid Roundtable, founder of the BigSkinny.com, Lou Bassanese, and Yahoo Finance senior reporters Ali Canal and Inez Ferre. Lou, coming to you with 2 out of the block here. 2 questions off the jump here. 1, on this Amazon layoff news, what's the economic read-through in your mind?
I think it's an improvement of margin, but nothing to worry about as a recession. If we rewind to 2022, 2023, you saw massive tech layoffs. I think we had 150,000 layoffs in 2022 alone, and that included 18,000 from Amazon. Tech, in my mind, is notoriously bad at right-sizing employee counts. And I don't want to diminish the impact to actual humans losing their jobs. But if we look at X, for example, when Elon Musk took it over, he cut over 50% of the workforce, and it's still operational. You're talking about Chegg cutting 45%. So I think this is just the normal course of finding the new equilibrium in tech. Amazon especially has to do that because they're ramping up robotic workers, automation. But at the same time, they have the lowest margin out of the Mag 7 at about 10% net margin versus an average of 25% for the rest of the Mag 7.
Okay.
So necessary move to restructure.
I hear what you're saying, Lou. So these layoffs, maybe not predicting some form of sharp economic downturn. I get that. Follow-up question here. If you are an AI bull, if you love Mag 7, isn't this news from Amazon the news you want to hear? You want to hear layoffs. It justifies how far you have pushed up the stock here the past 2 years.
Me personally, I don't own Amazon. I own Alphabet. But look, I do want to see this. I want to see the leaders of the AI trend and the Mag 7 really leaning into productivity. So I think it is a bullish sign. Again, we're not going to really be able to sort this out until you see the follow through in the products and solutions and the revenue generated from AI. We're still in the early innings to know how high and far this can go. I think that's all to be determined. But I can tell you this, there's an insatiable demand for chips. There's an insatiable demand for energy at the data centers and new data centers. So I think we're still early here. I wouldn't read too heavily into head counts to determine what's going to happen with the use of AI and how much ultimate profitability you get. I mean, you mentioned it. Microsoft now up to 135 billion with their investment in OpenAI as that revenue is just starting to ramp up.
Inez, over to you. I'm going to stay on this Amazon layoff news for a second. In your view, based on all the companies you cover, all the sectors you watch, does this signal anything about the economic outlook? I get what Amazon's trying to do. They're leaning into robots in their factories. They're trying to push AI chatbots internally. But when you lay off 14,000 people, you have to be seeing some form of signals in your business.
Yeah, look, certainly it's a little bit difficult to tell right now because we're seeing these headlines from these big companies, and of course you hear of Amazon, you've heard of Target as well, you've heard of Chegg. So you're looking at these companies and thinking something is definitely going on in the labor market, and we saw that with the data before the government shutdown. The question is, how far will this go? Is this a leading indicator of more layoffs to come? We know that these companies are heavily incorporating AI into their workflow and also investing in AI. So somewhere they have to cut costs, and that may come at the expense of these headcounts. But the question is, how much further will we be seeing these headlines? I mean, if you ask any college grad, they will tell you that it's very difficult for them to find entry-level jobs because their unemployment rate is at around 5.3%. So certainly something is going on in the labor market. It's just hard to tell how all of this will shake out.
Lou, quickly back to you. Team just told me Apple crossing the $4 trillion mark. And what caught my attention in this Microsoft OpenAI news that hit moments ago, the new arrangement excludes hardware. So if you are an Apple shareholder, should you be absolutely terrified about what OpenAI might be working with Jony Ive? We've heard maybe it's a pen. It's not a phone, but do you need to be concerned here?
Yeah, listen, I am a longtime Apple shareholder and bull. I think they definitely have to lay out a strategy in AI. I am concerned. I mean, I've said this. This is the first time in holding the stock since 2014 where I'm concerned about how they're going to iterate into AI to own that space. And I just haven't seen convincing evidence of that. So to your point, I think it's instructive. But I'd also point out to Apple's at the high end of consumer spending. They have a lot of margin room to figure it out. They don't have to be first necessarily. But I think they are now the gap between them and the rest of the Mag 7 in terms of AI implementation is widening, and it's concerning, but for me, not yet a reason to sell.
Ali, I was reading the Microsoft news. First thought among many was, wow, this just solidifies that AI bubble talk. Yes, you had Qualcomm rip almost 20% higher because they're coming out with a chip that won't be available until next year, and now you have that valuation on OpenAI. Wow, it's some big numbers being thrown around here.
Yeah, huge numbers. Year to date, some of these names are up nearly 50%. And a lot of that has been driven by the AI hype. And Brian, I've written so many times about whether or not we're in an AI bubble. I've talked to so many strategists, and it's really 50-50. Some people say absolutely. Other people say not right now, but valuations are certainly high and expensive. And because of that, there has been more commentary that we could be due for a near-term pullback. The bullishness doesn't seem to be going away anytime soon. Clearly, this is something that multiple companies are trying to integrate into their business models. We just heard from PayPal earnings this morning. Part of the reason why the stock is rising today is because they announced a new partnership with ChatGPT. Adobe is looking to explore a partnership with ChatGPT. So it's clear that this is the future. AI is becoming more and more embedded into our everyday life. It's going to continue to play out that way. It's just at what point does the rubber meet the road and maybe valuations are a little too hot, a little too frothy, and we could see some sort of a pullback? That's something that is percolating more and more among Wall Street strategists because of how concentrated the stock market is. So just something to keep an eye on as we continue to float around those record highs.
I hope OpenAI comes out with a pen. I want a pen that just talks to me and makes my life a lot easier. Please, just come out with it. All right, a big thank you to my opening bid roundtable. Appreciate y'all. All right, everywhere you look, there are signs of an AI bubble, just like we were talking about. We got the latest 2 indications within the past 48 hours. Qualcomm shares exploded as much as 20% on Monday, as it said it will launch new AI chips that rival leader NVIDIA. Here's the rub, though. These new chips won't ship until sometime in 2026, and it's unclear how much inroads Qualcomm can make against NVIDIA and even AMD. The second AI bubble indication is today, as PayPal said it will become the first digital wallet on ChatGPT. Great news if you are the folks at PayPal, except that other deals like this are probably in the works by OpenAI, and this won't debut until next year. Zoom out, and bubble spotting becomes even easier. The Magnificent Seven tech companies now account for more than 1/3 of the value of the S&P 500. Let's dive into this more with someone who has pretty much seen it all in technology, SailPoint CEO Mark McClain. Mark took his cybersecurity company public in February of this year. Mark, always nice to see you. It feels like we were just there talking about your IPO, but since then, I mean, the AI market has absolutely hit entirely new gear. I'd love to get your thoughts on what we heard for this, from this morning, for example. Microsoft and OpenAI restructuring their partnership, a really eye-popping valuation. What does that say about tech stocks?
Well, I'm not in the business of stocks as you all are, but I think we're all observing some of what you've all been calling a bit of a bubble. And I think maybe unlike some of the things that have been referred to as bubbles in the past, I think most people are pretty convinced this is a systemic shift in the technology landscape. There may be some sense, a friend of mine said to me recently, we may be overestimating the short-term impact and underestimating the long-term impact. I think this is a fairly significant tectonic shift in technology, but how fast it gets adopted and how companies continue to look at the investments they're making and what it does for their business is still a little bit, uncertain at the rate of that change.
Given where the valuations have come on AI, Mark, does that change how you plan for your business? Maybe you want to go out and buy another company to improve parts of your business. Do you just say, look, no, guys, we're not pulling the trigger here at these prices?
I'd say for us, we're in the realm of M&A. When we think about that at all, we tend to think from a perspective of our own roadmap. We try to be a very market-driven, customer-driven company. We think about where we think we need to go based on what we're hearing in the market from our particularly leading and largest customers about what they need and where they're going. And then we're always looking for ways to accelerate that roadmap by looking at technology acquisition and pulling something in to accelerate our vision. But in general, I'd say we're much more focused on kind of listening to what the challenges our customers are facing. And Brian, as you said, everybody's talking about AI. Most large companies have pilots or projects, but there has been a little bit of a slowness in adoption, I think. And I think from where our perspective as a security vendor, that's generally because there's some risk that they don't feel completely comfortable with yet.
What if this AI valuation bubble bursts? Would that be bad? What would that even mean to the markets and companies like yours?
Yeah, I think there's always a general sense of the economic backdrop, right? And it's been such a noisy year, right? With the tariffs and the economy and the shutdown. But we find that most of our customers do take that longer view, and they're thinking about where they need to position their business going forward. If there's a bit of a bubble burst, as you guys just pointed out, such a large portion of the S&P 500 is based on the top 10. I don't know what the magic term is. We used to have the Magnificent Seven, whatever we call the top 10. But I think
just gigantic companies at this point, Mark. Just humongous companies.
Yeah. Really big people, big stuff.
Yeah.
I think at the end of the day, we're all watching that and a little nervous, but I think most people are actually looking through that now to the sense that, okay, there is that part of the pyramid, that top 10, but what's generally happening? And we just feel like most companies are pretty intent on looking at ways to invest in technology in ways that will advantage their business going forward. And somebody said recently, you're either a tech business or a tech-enabled business. Those are the only two categories left. And so I think people are looking at how do they advance their business strategies using this tech, and everybody's pretty excited about what it can do and worried about some of the risks associated with it.
When you hear a company like Amazon, Mark, say, we are laying off 14,000, and there is some speculation that might just be the start. I mean, they may go on to announce thousands, tens of thousands of more layoffs in part because of AI. What do you think? What's your first thought?
Well, I think sometimes, and Brian, I'm not a historian, period, or a business historian technically, but I think about the Industrial Revolution. I say, look, if you walk through an auto factory in the 30s, it was full of people, and if you walk through an auto factory today, there's a handful of people and a lot of robotics and machines. So I think we're going to see some shift of certain kinds of work. I mean, 80 years ago, there was a lot of people doing accounting work that got done by IBM mainframes in the early era of mainframes. We have shifted work around in our society over time, farming, manufacturing, with the advances of technology, but we're pretty good at redeploying people to work on the new problems that emerge. How much growth has there been in healthcare as we shifted out of other industries? But the challenge I think everybody's wrestling with here is the speed of this thing, right? It's coming at a much faster pace than, say, either of these others. Industrial revolution, the initial computing revolution. So I think it's that discontinuity that makes people a little nervous. I think we are going to continue to see some work displaced by some of this technology. We're also going to see a lot of new work created because of the technology. I don't think we're maybe giving quite enough of that airtime. Some of the jobs that are going to emerge 5-10 years from now, we don't even know what they are today because they're going to be driven by the needs from this new technology as well.
Mark, your business is surging. You're having a good year. Can you keep up your growth rates with fewer people, in part because you are now deploying AI in various departments of your business?
Yeah, I think for growth, that's a great point, Brian. I think we look at it that way. As a growth company, our sense is that we may be able to hire fewer people than we would have otherwise because we're leveraging technology. We don't see any short-term need or even desire to reduce people. We just think if we can be more efficient and effective with some of these technologies, then we may hire fewer people in the future to support what we hope will be continued strong growth. And so I think that's how we look at it. I think a lot of growth companies look at that. I think when you see these intensely physical companies, Amazon's got a lot of warehouses and a lot of people. If they can displace some of the folks that were doing work allocation, I suppose, I don't know their business on the inside, obviously, but if they can displace some of those people with some of this technology and robotics, yeah, they probably will. But I think for most companies, it's like, how can I continue to grow? If you're a tech growth business, how can I continue to grow and maybe use a few less people than I would have otherwise? So it makes us a little more efficient, a little more profitable as we grow.
Good to talk to you not on an earnings day. Thanks for coming on and talking about all this stuff. SailPoint CEO Mark McClain. I'll talk to you soon.
Thanks, Brian. Good catching up.
Appreciate it. All right, straight ahead. I am all in today on the impact to jobs and stock prices because of AI, in large part because of Amazon's big layoff news. According to a new survey from Just Capital, the American public and investors disagree on where AI profit gains should go. More on this with Just Capital CEO Mark Whitaker next. Amazon said today it will lay off 14,000 workers as it aims to push the envelope on driving AI throughout its colossal tech operation. One part of why Amazon may be taking this action is that its stock is the worst performing member of the Magnificent Seven in the past 5 years. If you don't think the stock price is a key consideration in top execs and the board signing off on these decisions, think again, friends. Having said this, a new survey of investors from Just Capital suggests Amazon and other companies laying off people because of AI need to clearly explain how any profit gains will be distributed. And Yahoo Finance exclusive Just Capital CEO Mark Whitaker joins me on set. Good to see you, Mark. It's been a while.
Great to see you, Brian.
So take me through some of the findings in this survey. What stood out to you?
So the whole point of the survey was we wanted to ask the same questions of the public as proxies for workers and consumers, of shareholders, and pretty soon we're going to do the same for business leaders. So we're looking for areas where they agree and where they disagree. One of the areas where they disagree, for example, is how companies can distribute the proceeds of greater AI-based productivity. Investors, no surprise, 27%. The top choice was returning capital to shareholders.
Yeah, because margins go up, earnings go up, stock price goes up. Yeah.
Exactly. I was actually surprised it was only 27%. A lot of investors recognize that there were other uses of that, lowering consumer prices, growth, and including training for workers. Workers, on the other hand, they see the productivity gains, 33%, 35% see efficiency and productivity gains. They know layoffs are coming, so there's a lot of caution, I think, about that. 47% of workers expect layoffs. So it's not, we saw the Amazon layoffs this morning, it's not whether they should happen, it's how companies should do them. Mm-hmm. We've seen a lot of support, over 80% of support for companies investing in training, AI-based training. We've seen a lot of support for investors and workers for investing in displaced workers. Portion of AI spend going to displaced workers. We also saw agreement between investors and workers on how much money companies should be spending on AI safety. So it's a really interesting kind of areas of agreement and alignment and disagreement.
How deeply do you think, and you're plugged in, you know a lot of CEOs and board members across corporate America, how deeply are they thinking about displaced workers? When I hear Amazon laying off 14,000 people, these are human beings with lives. And you know, the cynic in me would say they're doing this because they just want to boost their stock price. You heard me in the opening here. One of the worst performing members of the Mag 7. I mean, I think a large part of it is because of that underperforming stock price.
I think one of the overwhelming results of the investor survey was efficiency and reductions like that only get you so far. It has to be about growth. You know, partnerships now are really about growing top line, growing revenue. I think that's why return to shareholders is so prominent as a criteria for investors. But I think company leaders would say, well, growth through AI can come from lots of different ways. Investing in my workforce, attracting the best talent, growing the top line, retaining my consumers. You know, we see PayPal's partnership is really about the consumer experience or the customer experience. So I think it's evolving from simply, you know, how can we boost worker productivity, displace workers? But I would come back to the point I made earlier. I think it's how companies lay people off. I don't know what Amazon has said today.
Well, they put out a press release. It's tough to wake up to that.
Did they say how they're treating workers? Like, is any of their spend going to their?
They'll get severance, but that's pretty much all they disclose, at least publicly.
Right.
I mean, do you think AI is good for corporate America? I mean, if we're having this conversation in 10 years from now, while AI may improve the profits of businesses, is it really good for the fabric of this country?
I think this country's built on technology and risk-taking and advancement. I mean, I think that's what makes the American capital market system, you know, the best in the world. So I do think it's good. I think technology is always disruptive. The pace of change is what's different here. It's so fast. So to your point on displaced workers, you know, horse and buggy operators at the turn of the 20th century had plenty of time to adjust once the Model T started rolling off the conveyor belt, or the production line. But here, you know, you've got months, you know. Having said that, you know, there's a lot of opportunity. I just came back from a CEO conference on the weekend. More middle market companies adopting AI. You know, there's a lot of opportunity for growth, new businesses being created, new sort of areas of innovation, you know, which is another area that investors want to see more of. So no, I think the emphasis tends to shift. At the moment, it's on the impacts, on the negative impacts, but I think there'll be positive impacts too. Real
quickly before I let you go, has it been hard to be a Just Capital, you know, a company that is focused on leaders who are doing good initiatives inside of companies when the political winds have blown to maybe we don't care about ESG, maybe it's okay to lay off thousands of people, we don't care?
Three things. One, our Just ETF has just been seeing net inflows. It's just broken a $500 million barrier, so it's doing great. Companies, I'll tell you this, Brian, companies are focused on the ROI of stakeholder performance. Where can I put $1 down among my workforce, my customers, to get the biggest bang for the buck? And I think that's healthy. I think that's disciplined. You know, you want to invest in stakeholder leadership because of the business case. So we've not seen companies pull back from that. Where they have pulled back is how they talk about it and whether they talk about it. And you know, we're helping them with that too.
All right, well, good to see you as always. Just Capital CEO Martin Whitaker, thank you for bringing us these survey findings. We'll have more, a deeper write-up on the Yahoo Finance homepage very soon. I encourage you to check it out. All right, it's almost time for Yahoo Finance's big global annual event we call Invest. Live all day on November 13th. Best believe we will dive into all things AI with top guests like Affirm founder Max Levchin and Robinhood co-founder Vlad Tenev. So have the date saved for Invest. It will be a special one indeed. I am so psyched for this event. Coming up, Julie Hyman has you covered for Market Catalyst. Don't go anywhere.